Jerry Fish is the Loan Man, and we're here with Frank Perez, President of American Coast Title, and we're going to talk about title insurance. So Frank, what is title insurance?
Well, Jerry, a very basic definition of title insurance is protection against defects in the transfer or encumbrance of real estate.
I know as a lender, we require title insurance on refinances and purchases. But what about home equity lines of credit?
Well, as a lender, you want to be ensured that the loan amount that you are making available to the borrower is secured by their interest in the property. That's a need for the title insurance product. On a sale transaction, as a buyer of property, it's the single biggest investment I'm going to make. I want to be sure that the individual selling that property to me is able to convey clear title. And frankly, while it's not a legal requirement, I can't imagine too many instances in which you wouldn't want to have title insurance, a protection of title insurance. On the home equity loans, most lenders do still require title insurance, although there are some that at the lower amounts will go without it.
And we discussed several months ago what happens since there are so many foreclosures and some investors are trying to buy properties at the sale date, and they're getting them just right at the auction. You were telling me that there are some title problems that can arise from somebody doing that because there is no title insurance when somebody just grabs a property that way.
Right. What's provided at that point is what's called a trustee sale guarantee, and it is not a policy of title insurance. And frankly, the courts in California are very, very protective of the property owners. So in order for a title company to insure any property that has been purchased in that manner, they're going to make very, very certain that the foreclosure process was followed and adhered to very, very strictly, because the exposure to the title company is vast.
What are the possible problems that can occur in a transaction if there is no title insurance?
Well, many problems can arise without title insurance. You do have the problems of fraudulent transactions, and in these economic times, there's an increased number of fraudulent documentation that is being done. Liens of record that are not accounted for, and all these are exposure to the insured.
Let's say, for example, an elderly lady deeds a property over to somebody, not a relative, passes away 2 weeks later, and there was no title insurance, even though the deed was notarized. Deed is recorded, and now that person is, inherited a property. So let's just say that person now wants to go ahead and refinance the property or sell the property. What are the title issues involved in that?
Well, the title issues would be significant because while the validity of the deed is not something that we would be questioning, there might be heirs that would contest the validity of that transfer, and no title insurance company that I'm aware of would be willing to insure that type of transfer. It would probably have to be determined through probate court.
What are the most common ways to hold title to property?
Well, with California being a community property state, the most common way to hold title is as joint tenancy, which is right of survivorship for the surviving joint tenant. Other ways to hold title are as community property or tenants in common, but the way that any individual holds title really should be with the advice of either their attorney or a CPA for the tax ramification and legal ramifications. Certainly many people are holding property now in trust as well.
What's the difference between an owner's policy and a lender's policy?
Well, Jerry, an owner's policy of title insurance insures the purchaser of a piece of real estate as to their interest in that real estate, and that no one else has any claim that might jeopardize that interest.
Down the road.
Down the road.
Okay, that does pop
Right.
up.
Right. And actually, you bring up a very good point, because unlike casualty insurance, title insurance insures past events. We insure the chain of title, the transfers that allowed the existing owner to legally transfer that property to the new owner, and that's why title insurance is a one-time deal. We only charge one fee at the time of the transaction, because we have the ability to evaluate the transactions that have occurred leading up to this insurance. So it helps us in the risk management, which is insurance. It helps us in that regard.
So if I were to purchase a property then, and all of a sudden an IRS lien pops up from the prior owner, that's not my problem, is it?
That's not your problem, no.
That's your problem.
That's exactly right, because we insure up to the date of the transaction. The insured date, if that were to be tomorrow, it'd be August 25th, whatever we want.
So how are you able to know right before closing that there are no liens or there are no judgments or anything that could cloud the title?
That sometimes causes frustration, because the only way that we have of knowing that is doing what the industry refers to as a date down. On the evening prior to recording the transaction, the property, we do what's called a date down, where we run the legal description and the owner's name to ensure that there has been no recent liens or issues that have arisen against that property. And sometimes, frankly, the day before, there's a judgment, child support, whatever it might be,
or
and we have to address
the
that.
lis pendens.
Absolutely, lis
Which
pendens.
we've seen. Lis pendens is what?
Right.
Lis pendens is
a notice
I
of
know.
legal action.
I've seen it in some
yeah.
of my transactions.
Absolutely, it's a notice of legal action, putting everyone on constructive notice that someone has made claim against the property.
And you can't
And we
transfer.
cannot ignore that. It's a matter of record, and that's what title insurance deals with, is matters of record. A lender's policy of title insurance insures the lender that is making a loan on the transaction as to their position in terms of the liens, priorities, and their interest in that property as well.
How are fees determined between a buyer and a seller? Who determines them, and how does that work?
Well, fees are negotiable in a resale transaction, but the rule of thumb is normally that the seller will pay for the owner's policy of title insurance, and that the buyer will then pay for the concurrent lender's policy of title insurance that is issued in conjunction. On a refinance, it's strictly based on the loan amount, and frankly, it's at a discounted rate because it is one insured as opposed to two.
So when escrow's about to close, a lot of things come together. The borrower brings his money in. We have existing lien holders are paid off. Explain the money trail with respect to the borrower's funds, the escrow funds, the payoffs. How does that all kind of come together at the closing of escrow, Frank?
Basically, what occurs at the closing is all funds are submitted to the escrow in order to have the available funds necessary to consummate the transaction. From a legal standpoint, title companies can only deal in what is called good funds, as legally defined by the state of California. Immediately available funds, which means wire transfers, cashier's checks.
No personal checks.
No personal checks. It has to be good funds in order for us to close our transactions. So escrow will ensure that all funds are available, that they are indeed good funds. They will transfer that to the title company on the date prior to the recording, and the transaction will then be consummated the next day. All payoffs.
You like the word consummate, don't you?
Did I use it again?
No, it's okay. It's all right. It's all right. Just,
All right.
It's
Okay.
one of your favorite words. Go ahead.
Okay, so when we have the available funds and the transaction, once we have confirmation, not
Yes.
consummation,
Okay.
but confirmation
Yes.
of recording, we then will make the necessary payouts, disperse funds, available funds to all parties. So we'll pay off the existing lenders, we'll pay off any liens, pay off, forward the balance to the seller,
Yes.
and all funds will be totally accounted for and dispersed.
How long does title insurance last?
Title insurance lasts as long as the interest of the insured is in place.
If, for example, I just purchased the property, 2 months later I want to sell it, I want to refinance it. I just went through the whole escrow process, paid for title insurance. Do I need to get title insurance again?
Well, as we discussed just a moment ago, the interest of the insured terminates upon the transfer or a new lender coming into play. So yes, the need is there for a new policy of title insurance. However, if it's a refinance transaction, there are extremely discounted rates that are available, but we are now going to be insuring a new lender, or even possibly the same lender, but on a new loan amount, a whole new transaction. Process starts all over again. If you're selling the property, then you're terminating your interest. The new owner's interest is what's now going to be insured. So yes, it does require a new policy of title insurance.
And finally, I guess the final question is, how has your business changed this year from last year in light of the new RESPA laws?
From a title standpoint, there hasn't been a great deal of difference other than the need for more definitive quotation of fees. the biggest impact has been on the escrow end of it, and we at American Coast Title do escrow as well. So the paper trail is infinitely more difficult for the escrow than for the title end of it.
The real reason why I brought you here today, and the most important question that I have today is, you don't bring bagels anymore. And why is that? What happened? Because in the good old days,
Well,
guys like me, we used to get bagels, we used to get tickets to baseball games, we used to get box seats over at Staples. That stopped quite a while ago. What happened?
well,
I missed that.
in the wisdom of the higher powers in Sacramento, they decided that only in the title industry is entertainment deemed to be a illegal inducement of business. So they passed in 2009, January 2009, Senate Bill 133 was passed, making it illegal for title companies. No food, no beverage, no entertainment. We're not allowed to engage in any of that. And frankly, you can imagine that had a very significant impact in the California economy. Staples Center was impacted. The Dodgers were not pleased with this. Western Bagel was certainly not pleased.
Because
So
title
that's where it's
companies,
at.
they had their own boxes.
Title insurance companies, the larger companies certainly did, and they had to relinquish it. You can no longer entertain.
Well, we've covered a lot of ground, you have to admit. But before we sign off, you have a company mascot, don't you?
We do indeed.
So we're going to cut away for about 1 second here. Then we're going to show everybody your company mascot, which I think has been good luck for you, right?
It has been very, very fortunate for us.
And he's a watchdog as well.
It is a she, and I will
Oops.
qualify this.
She's
I
a
will
watch-
qualify this by saying that she's not mine.
She's not yours.
She belongs
Okay.
to one of our.
Is that some
to-
kind of
to our
RESPA
escrow
violation?
To our escrow manager, Mary McGregor. That's Mary's
Okay.
dog. So.
And she brings her in once in a while. Hi, we're back with Hannah the Wonder Dog. Hannah is your mascot, right?
She is our mascot,
And she serves she's a guard dog. She protects you against angry clients, right? Okay,
we have no angry clients, Jerry.
Say hi, Hannah.
Yeah.
She's a super little dog, and
she
she's
is
the
a
company mascot. And we thought we would have a little fun at the end of this video. So anyway, thanks for joining us, and I want to thank Frank for his time and his words of wisdom. And have a nice day. Frank, you want to say anything?
Thank you very much for having me. I enjoyed it. And Hannah is a wonderful dog.
Hannah's going to say bye just a second.
Say bye, Hannah.
Bye-bye. Bye-bye. Bye.